Hi, I am Nur Fatimah Bint Abdrahim, the first financial manager of Post Malaysia, which is responsible to advise my top management whether they should make a loan based on the analysis of the financial statement and ratios of this company. Firstly, I will explain about the statement of financial position of Post Malaysia for 2021 and show the comparison between 2021 and the previous year 2020. The total non-current assets of Post Malaysia for 2021 is RM1,233,973, which has decreased by RM105,850 from 2020. The total current asset in 2021 has decreased by RM151,258, which is at RM851,450 compared to the previous year. Meanwhile, for the total current liabilities of the Post Malaysia in 2021 shows an increment of RM13,093 from 2020, and lastly, the total equity and liabilities in 2021 was decreased by RM257,108 from the previous year. Now we move on to the ratio analysis between 2021 and 2020 and their comparison with the industry index. For current ratio, in 2020, Post Malaysia Berhad's ability to pay is 90 cents for RM1 of its short-term liability. For 2021, Post Malaysia Berhad's ability to pay is 90 cents for RM1 of its short-term liability. The firm's ability to pay for RM1 of its short-term liability in 2020 maintained to the firm's ability to pay for RM1 of its short-term liability in 2021. Next, for quick ratio, in 2020, Post Malaysia Berhad's ability to pay without having to rely on illiquid current assets is 80 cents for RM1 of its short-term liability. In 2021, Post Malaysia Berhad's ability to pay without having to rely on illiquid current assets is 70 cents for RM1 of its short-term liability. The firm's ability to pay without having to rely on illiquid current assets for RM1 of its short-term liability is higher in 2020 rather than the firm's ability to pay without having to rely on illiquid current assets for RM1 of its short-term liability in 2021. Now we compare with the industry index. The liquidity ratio of Post Malaysia Berhad is relatively not good because the current ratio is less than 1. Unfortunately, the ratios are lower than the industry index, with quick ratio 0.8 times in 2020 and 0.7 times in 2021 compared to the industry index with 1.4 times. The company performance in managing short-term obligation is less than industry index. We move on to the profitability ratio. Gross profit margin for 2020 is greater than 2021. GPM for 2021 is lower than 2020 with the percentage of 7.4% and is also lower than the industry index 16.1%. This means that the company has a profit that is less than the profit of the industry. Next, net profit margin (NPM) calculates the after-tax profit per ringgit of sales after deducting all expenses including interest and taxes. The analysis illustrates the NPM has increased in 2021 compared to the 2020 from negative 13.7% to negative 10.8%. The percentage of NPM for the company is less than the industry index, negative 15.30% for both years. When the percentage is low, the company's ability to get returns is also low. Furthermore, operating profit margin (OPM) analyzes asset productivity in terms of generating returns for creditors and investors. As we can see above, we can state that OPM increased from negative 13.71% in 2020 to negative 10.85% in 2021. OPM of Post Malaysia in 2021 is less than the industry index of negative 15.30%. Therefore, the productivity of the company is better than the industry index in 2021. Moreover, return on asset (ROA) evaluates a company's total return on all its assets and measures the efficiency which assets generate income and the firm's capacity to maintain control over its activities. Looking at the table, ROA has shown a decrease from the previous year with a percentage of negative 9.5% to negative 11.5%. The ROA for the year 2021 is lower than the industry average with a percentage of negative 11.5%, which means that the company has a lower return on asset investment. In addition, return on equity ROE measures the rate of return on equity investment. ROE in 2021 is lower than in 2020 with negative 34.3% percentage. The ROE for the company in 2021 is also lower than the industry index of 8.5%. Therefore, the rate of return on equity investment for the company is low. These are the trend analysis graph for liquidity and profitability ratios in 2020 and 2021 of Post Malaysia.